Welcome members to another weekly update. Please check, as always, the overall market video. I talk about the long-term, short-term trend, and here's where you just hear my thoughts aloud and look at things I'm doing right now or not doing. So let's catch up on a stock pick I made a while ago, actually, as I was commentating on how it respected this moving average tile. Just keeps on moving up, which is great news. I was in around here and it's bounced off nicely and up it goes. Now this is only, I say only, but this is only like a 200 point or $2 rise, but everything's proportional. So if you're spread betting, for example, you're not going to spread bet the same amount per point every time, are you? You're going to increase your amount per point depending on or decrease depending on the price of the stock. So all your gains and all your risks should always be the same. So it's not about the dollar rise, it's about percentage gain, and percentage gain on here is obviously without thinking out here, we've got like a $3 out of $18, so it's looking really good. So you would have adjusted your pounds per point or whatever. And if you're doing options, of course, it's really all irrelevant because it's about the amount of movement in the shortest time possible, and again, percentage gain. So that's looking very good. I'm just going to let that one ride for now. Let's look at some new stuff here. Let's take a look at Nugget, because this was interesting and it raises some questions during the week. Okay, so let me explain what I'm doing here, right? It's all based on gold. Miners lead the metal. Here is where my initial focus was, on the gold. We had this really nice double bottom here, which is a classic double bottom, and then this overhead resistance around there, okay? I explained that there was a breakout and that there could be a pullback, and which is indeed what happened, and that is a healthy thing to happen, unlike the overall market. And so it's pulled back right to about almost like right on resistance, actually. Remember, you've got some wiggle room with resistance and support lines. Okay, it's not exact. You can give it a little bit of credit, right? So it's something like that, and it just saved it, and it just saved itself on Friday. And that made it all it was a pullback rather than a failed breakout. And so there was that little bounce there. So that is a very, very nice entry point now just for the metal. So remember, there's investing gold. That's just gold you hang on to. But trading gold, really, really nice entry point right now. Now, if you wanted to do that, you could do that with, if you wanted some leverage, make it a bit more exciting, you could go to UGLD. And that's 3 times gold, which is obviously the chart looks, very similar, but a little bit more distorted because, you can't go by the 3 times leverage version. Go by the original, and then you use the leverage version for your actual vehicle if that's what you want to do. So that's what the chart I'm looking at, but the actual vehicle I would buy would be that one, UGLD, if I was going to do that. And I'm not going by this chart though, okay? So so that's what was happening there, and really, really nice entry point for trading gold right now. So what I was looking at then, so I shifted to the miners once I'd seen the metal do that, and we're looking at GDX. GDX is an ETF for a basket of gold miners, and that gave me this, great looking chart. Now I could see it on, the doing a little pullback, just like gold did, but the breakout was the thing, and that allowed me to thought, okay, this is a great entry point. I can get in on it around here. And get in as half of my position, and then if it pulls back, I'll add another half, which is what happened now. So I added some more. So now, but the vehicle, just like gold, I chose to use for this was a leverage version, 3 times leverage, which is called NUGT. And that's what that looks like. And I was explaining that what I was using for NUGT was the weekly chart, because it was so that was what I'm doing with these kinds of stocks, going by the 40 week. So the weekly chart was what I was looking at, but remember I'm looking at GDX. GDX is the chart, okay, because it's 3 times GDX, as you don't get so much distortion. So, and what I was saying is that when GDX goes below the 40 week, that will be my point, or more specifically, that was my break-even point. But really what it was, I was looking at this pullback, just like the metal, breakout, pullback, and I would have thought if it had got below that, it would have got into trouble, but it hasn't. So I'm using the 40 week as a stop loss here, but I'm going by lots of different things here. I mean, I think gold's looking like it's going to rally, and NUGT is the vehicle I chose. So using that on that basis, moving forward with that one, and that allows really quite a it's bounced, and that's actually a good entry point as well for the miners. I'm watching individual miners as well, but the overall metal is looking like a great opportunity as well. What I want to see from NUGT this week, get back up above into the into this upwards momentum here, along with everything else. So let's look at, sorry, that's GDX is what I'm talking about. GDX is the chart I'm looking at. NUGT is my vehicle, so I want GDX to carry on from there, and that little bounce forwards and keep climbing up. Let's look at a couple of new ones caught my eye that were interesting for buys, and one short actually. Well, let's look at the short first of all. Remember, you wouldn't normally be shorting things in a bull market. But if something's already in a downtrend, or more specifically in this case, it's presenting, remember, it's not so much a certainty. I'm just looking at things where if I'm wrong, I lose a very small amount. But if I'm right, I'll gain, 10 times what I would have lost. That's just the game I'm playing, And this one's interesting because this is the energy sector ETF. And I like how it kind of respects its 40-week line here. It's got a precedent here of, once it gets below, it stays below, hits it there, comes back, tries again there, comes back, tries it there, comes back, and eventually it does break above it. The line trajectory changes, it stays above it, and when it does break below again, it goes below. And now what we've got here is that scenario again, and we've got the average is now turned downwards, and we've really got that kind of classic thing for shorting now, where approximately, where are we now, when March, we're coming to the end of September, so that's March, April, May, June, July, August, September. We've really got that classic thing. A thing what I teach for shorting is approximately 7 months after the point where it breaks down, i.e. there, we get this pullback into what is now a descending moving average, and it hopefully will hit that and bounce off it and come down again. Either way, this is a brilliant entry point, because it's such a low risk one, because I'm going to close this out if on the weekly chart closes above the 40-week moving average. I can see it, but if I go to the daily chart here, XLE is the ticker, and there you can see it really clearly. Now you see the downtrend it was into was broken a little bit here, and there was a bit of buying volume, but that's not uncommon to see buying volume on something going wrong. I mean, just because there's buying volume doesn't mean that all is well. So if I could enter here, that would be decent. I'm looking at the RSI here, and SV60 was actually triggered there as actually a buy around about there, and it's still keeping me in the trade using that system. So if you don't know the SV60 system, that's what that's saying. So I might wait until it comes out of this shaded area, gets below 70%. There's two ways of looking at this. I could get in now and get the best price, but have more risk because I don't know if this thing's stopped climbing yet. Or I could wait for it to turn, wait for the what I want to happen to begin, and then get in. Or again, I could play it a little bit of both ways. I could put a bit in now and a little bit more if it starts to turn. Either way, this is extremely low entry point. So that's an individual thing. There's different choices, but the chart itself is looking really quite interesting. But the weekly close is the one I would look at, and then for shorting. So that's that one. What else have I got? I've got here is let's look at Pico. Right, straight away they should see what I'm liking about this one. Same old. I'm looking for low risk entry points and trying to catch a rising trend. This one here, you can see that clear line of support and resistance, old resistance, new support here, very long support line there. The only thing that bothers me a little bit is it's almost a little bit too long support, and that's made the moving average sort of level off a bit. But it's so clean on the daily chart. It's hard, not to try and get in there at around 16. Looks like about 1610, somewhere between 1610 and 1620 maybe is a great entry point, something like that. Kind of, and if you're wrong, then it'll be because it closes on the daily somewhere down here or something like that. It's broken support. So very low risk entry, and it still looks like it's got some mileage in that one. Another one is Avgo. This is a really high flying stock here. And it's a very expensive one, so you need to bear that in mind. How much margin you would want for doing that. But you can see this trajectory of the stock's just amazing. The trick is with this one though is catching it, at a decent point. If I was going to look at the daily chart, you can see that support there. I mean, it's not amazingly strong. It's only over a few days, so I wouldn't be looking at getting in there. I think something like if there as and when a correction comes, I'd really look in for a stock like this. There's so many stocks that are, would be just great to catch on a decent correction. Somewhere like around there, you can see it on the weekly chart here. Somewhere around 225, 226ish, something like that. They'll be looking for that one to sort of catch in on there. And that's one great thing about why I want a correction to happen, not just because it's healthy, but because it really creates some excellent entry points that for low risk entry points. But it's not saying so yet. Anyway, so there's plenty to think about there, and I will speak to you next week.